What is the M2 money supply and why does it matter more than gold's nominal price? Why are central banks buying record amounts of gold at $3,800 an ounce when headlines scream all-time highs? If gold is so expensive, why does the math show it's actually too cheap? I'm Todd Graff, this is Joe Elkier, and this is the Gold Spot. Joe, so as you know, the M2 money supply measures the total amount of money circulating in an economy. It includes cash, checking deposits, saving accounts, money market funds, and other liquid assets that people can easily spend. Think of it as the broadest measure of spendable money in the system. Here's why this matters for gold. When governments create more money, each dollar becomes worth less. Gold being finite should theoretically rise in price to reflect this currency debasement.
Todd, since March of 2020, the Federal Reserve has had a massive increase in the M2 money supply, all the way up to $22 trillion, a 400% increase in the money supply. If gold had kept pace with this monetary expansion, it would be trading much higher. And this is why the central banks are buying. They're not looking at a nominal price, they're looking at gold's value relative to the money supply. And that measure, gold at $3,800 is actually undervalued. You could even go higher than that. I mean, gold's going to be undervalued for the continued future just because the dollar is going to keep losing value and metals are going to keep climbing. Central banks see what, the general public doesn't.
Yeah, Joe, that's right. And that's exactly why China added 225 tons of gold in 2024 and continues buying in 2025. Poland's accumulating, India's loading up. Central banks worldwide are purchasing at record levels. They're not buying because they like shiny objects. They're buying because they understand something the market is missing. So while everyone fixates on nominal all-time highs, central banks are looking at a completely different metric: gold's price relative to global money supply. That's what's important right now.
Bottom line, Todd, gold is mispriced. And since March of 2020, the Federal Reserve, we've created $20 trillion in new money, a 400% increase in that total M2 money supply. More dollars created in 4 years in the previous decade combined. Yet gold, the asset that's supposed to protect against currency debasement, hasn't even kept pace with this monetary expansion. So sky's the limit.
The numbers don't lie. If gold matched its 2011 money supply ratio, it would be at $4,400 per ounce. If gold matched the 1980s ratio, it would be at $9,700 per ounce. The current price is only right at $3,800 per ounce.
So the moral of the story, Todd, gold isn't expensive at these current levels, especially relative with the amount of money that has been created. There's never been a more important time to be understanding how precious metals can protect you. Go to our website, request information, give us a call. We're always here to help. We're happy to answer questions. Like I always say, it's never been a more important time. You buy gold and wait. You don't wait to buy gold. We'll see you next week on the Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube and Rumble channels. Also, comment below if you have any questions or if you'd like to hear us talk about a specific topic in a future video.